What's going on, guys? Welcome to my channel. This is Mando with M Traders, and today we're going to be talking about, can I really become rich trading stocks? The answer will surprise you, as there's a lot of different things going on that might shock you. So make sure you guys stay tuned, and I will see you shortly. So what's going on, guys? One of the main things that people have been asking me is, like, can I really make a lot of money with just a teeny tiny amount of money or investment, initial capital? So the answer is yes. But can you also lose all that money at once? The answer is yes. Now, it all depends on your risk to reward ratio. Let's say you are an individual that makes $50,000 a year and you're able to, put in $1,000 for your initial investment. Can that money transfer into a lot of money? Well, we're gonna run some scenarios where we're gonna be using live data that's gonna translate into money. Basically, we're gonna be running some live scenarios where you're gonna supposedly invest $1,000, and what would those $1,000 will give you if you were to invest in the right direction. Otherwise, you will lose every single penny that you're there. So I just want to reiterate that this is not a financial advice. That's number one. Number two, this is not any type of consultation for you to make big bucks, but instead it's more like just my own personal opinion and my own personal experience on what have I done where sometimes my plays go my way. If my plays don't go my way, then, well, I lose my initial investment. And we're going to be talking about options specifically, because if you really want to make a lot of money with just a teeny tiny bit of an investment or your initial capital, we're going to be talking about options, right? Because stocks, unless you are bidding between $1 million to $100,000 on your initial capital, then this might not be suitable for you. Instead of that, if you're $1,000, if you have $1,000, $2,000, whatever, right, and you want to make your initial investment, we're going to be running in a scenario where what would have happened if I would have invested $1,000, a week ago or 2 weeks ago. So let's find out. Stay tuned. So I'm going to try to make this video very, very short and quick and simple. Number one thing you're going to have to do is download TD Ameritrade Think or Swim. If you haven't had that one yet, make sure you go ahead and download it, because it does give you the on-demand option, which is right over here, the on-demand, right on the top right corner, on demand. You're going to click there, and it's going to give you a lot of scenarios where you can go back and play what if scenarios, right? I did play the IWM, which is the iShares Trust Russell 2000. One of the main reasons why I played this one is because it's based on the indexes, which is the S&P, is the Dow Jones, the NASDAQ. And the reason I play it is there's two main things. One of them is my technical analysis. The technical analysis says, 170, 50 or so. Okay, 170.36 was one of the all-time highs, and the other one is that 169.25 was my one of the resistance levels. If you guys notice right over here, let me draw that for you so you guys can see it a little bit better. I am running a TOS script, which kind of makes my own support and resistance based on candles and time frames, and that's one of the resistance that it drew for me. Now, if I'm not an expert, it still doesn't matter, because I wouldn't still know that 169.25 was one of my resistance levels, knowing that 170 was one of the all-time highs. That plus knowing that the coronavirus was still going on, would I short it? Yes. Did I short it at these levels? No, I did not. I did short it around 160 levels, and I just kept it to like 150. But the options were very cheap. So one of the things I trade is options. Why options? Well, options give you more bang for your buck, but also they're very risky. So you guys got to make sure you do your due diligence in making sure you do your own research and ensuring you know what you're doing, right? So I'm just gonna give you kind of a quick scenario of what happened with me, or what can happen with you if you were to invest $1,000 and the market went in the direction that you wanted. So knowing that one of the number one things is knowing that the coronavirus was going on, and two, that we have a resistance of 169.25, and also knowing that 170.36 was an all-time high, my risk to reward ratio was pretty big. So I would have invested, even if it's a tiny amount of money, into IWM, because IWM is an index that follows the SPY, or the S&P 500, and the Dow Jones. So let's run a quick scenario. What would happen if I was to invest $1,000? So let's get started. So number one thing, I will pick something that's way out of the money. Even if it doesn't hit that that strike price, it's still gonna go towards that trend, right? So if the market is going down, your options should start going up if you are buying puts in the same direction. So, or if you're buying an option in the same direction. In this case, I'm buying a put, which I'm betting, right, that the market's going to go down. So let's say I'm betting 100 and that my strike price is going to reach 160. Even if it doesn't reach 160, if it goes in the same direction, you should see your option money go up. So it's kind of like playing penny stocks with large cap equities or large cap indexes. In this case, I'm gonna say, you know what, by February 28th, we should have a good amount of money. So let's say I'm gonna buy a single. Let's make it simple. No iron condors, no credit spreads, debit spreads, just a plain on simple put. I'm buying a put. So I don't have a lot of money. I'm broke, right? So I can only afford to buy 10 puts. I'm gonna buy it at market price, which is currently about, the bid is at 10 cents, as is 11 cents. So one of the things IWM is very good for is the liquidity. Liquidity is very good. You have a very minimal spread of 1 cent. That's not a lot. If you compare it to other equities where I see where the bid is $1.45 and the ask is $10, there's a lot of difference. So the liquidity is very small when it comes to that. Instead, I like to play like SPY calls or puts, IWM calls or puts. And in this scenario, we're playing IWM. I'm gonna buy 10 puts. And I'm gonna be buying it for 11 cents. I think that's actually too little. So let's make that 100 puts. Yeah, 100 puts should be about $1,000. Let's make sure we confirm this. Okay, 1,050. So I went over $50. So let's make it a little bit smaller. Let's make it 95. I want to make sure that if you only had $1,000, this could happen. Okay, 997. So $1,000. Perfect. So let's make sure we go ahead and buy it. There it is. We just bought it. Now, instead of waiting on this video until 228, let's fast forward to 228. So we're gonna go here. Let's make sure we go to our monitor. IWM 95 puts. I'm currently down $47. So my total investment was about $997. I pay 11 cents for the put, and let's see what would have happened if I would have waited until 228. That's basically about a week or so from there. So let's go. Wow, coronavirus hits, the news go on, a lot of people start selling. Notice that our EMA 9 is acting as a resistance. Every time it goes above that 180 or that EMA 9 on the 4-hour, it rejects. Notice that went to EMA 55. That would have been your second best entry point for shorting the market. I wanted to put with my finger where you guys cannot see that. 166.64, 166.43, 166.59. You know, you got 1, you got 2, you got 3 support points where the market did bounce from the 166 area. Now, the market did bounce all the way up to 167.06, which it was about 166.59. And it, you know, if you guys notice, it's also my resistance, which I drew right over here. It is also a EMA 55 resistance, which is one of the exponential moving averages, and also taking into consideration the news of, you know, coronavirus. You know, that would have been your best entry point if you were short to the party. That would have been your best entry point. So let's see what would have happened if we waited to February 28th, which was at 145. Your $1,000. What? How much money would it made you? Let's see. Let's go here. Okay. Here it is, people. $131,000. $131,000. That's what your $1,000 would have made you if you were to bid on the right direction, right? So one of the things I'm taking consideration on is this coronavirus is gonna go away. Think about it. We have more deaths on the flu than any other disease out there. And the flu is very, very common to us, especially in the United States. It's very, very common to us. So something to take into consideration is, you know, is this really worth it? Today is March 1st, and I'm already thinking that I'm going to be buying calls for tomorrow morning on Monday, February the 2nd, just because I know the market might be going in the right direction. I'm going to start adding little by little, but still, what would $1,000 make you? $132,000. Can you become rich? Yes. Could you lost your $1,000? Yes. You could have lost every single penny if it didn't go your way. Now, that is all up to you about your technical analysis. It's all about your type of trading style. But I just wanted to show you guys that what could have happened if you made the right trade on that specific ticker. So IWM liquidity is perfect. It's magnificent versus I don't know, Tesla. When you have an implied volatility of over 100%, you know, you might have a call or a put that's worth $60 one day, and the next day it might be worth $20. And it's not because, you know, the price of Tesla, which it is the underlying stock, is going up or down. It's just because the volatility went down, so the prices start going down, and the liquidity ratio is still pretty high. However, when you have the volatility go down, whatever the price was back then, you're gonna suffer significantly unless you're selling that put or you're selling that call. Besides that, I like to buy my puts, I like to buy my calls. And look at this. We just been talking for about a couple of seconds, maybe a minute or two, and we went from 131 to 137. So let's make sure we close it, right? We're gonna close the market. Send. Boom. All right, guys. So my $1,000 just made me $137,845. That's with $997 investment. Can you really become rich? Yes. Can you hit the jackpot? Yes. Is it better than going to the casino and bid everything on black or everything on red? I think so, because you have a lot more knowledge behind what's going on out there in the market, and you don't have any knowledge on the roulette if it's going to come out black or if it's going to come out red. You don't have none of that knowledge. When it comes to the market, you have a little bit of knowledge on what's going on. Is it risky? Yes, it's risky. Can you lose all your money? Yes, you can. You lose all your money. Can you make a lot of money? Yes, you can make a lot of money. The risk reward is there. I did short the market at 160. I did sold when it reached 150. Did I bought 100 puts? I did not buy 100 puts. I probably bought about 30 to 40 puts, which was more than enough to make me very, very happy for the week and kept me going on trading more and more. But when I say more and more, I'm not saying that I'm doubling and doubling and doubling, trying to make myself rich overnight. You know, it's more about lowering my investment or my capital when it comes to investing in the market, right? Instead of, let's say I made $50,000, I would only invest $2,000 to $3,000. I'm gonna keep my risk very low, you know. So my risk to reward ratio is very high. So in case it doesn't go my way, it can actually go my way. For example, I was actually when it reached 150. You know, I was in at 160, sold at my puts sold them at 150. I actually bought again. I bought a call, I believe, at 154. At 154.95, I bought a call again. I lost $7,000 like this. And I was very sad, but I'm like, you know what? The market's still bearish. I gotta go with the flow. And the flow was that the market was bearish, so I bought a 154.95. I bought puts, and my $7,000 slowly but steadily gave me a lot of money the next day. Can't complain, right? So I just want to share this type of trading with you guys, knowing can your $1,000 really give you a lot of money? Yes, it can, if you know where the market is going. If you know which ticker you should invest. I like IWM in my case, better than SPY, better than /YWM, which is Dow Jones, just because it is a very liquid ticker to trade, and it also follows the market. So if the market is going up, I prefer doing IWM, right? So again, my $1,000 investment became $137,000 profit. Hopefully you guys do like this video. If you guys do like this video and you guys want me to make anything else like this, make sure you do subscribe. That's number one. Click on that notification bell, and also go down below into the description. I do have a link to my Discord chat, which is free. If you want to talk to other like-minded individuals that do the same type of trading, that's basically where I, put my trades live on what's going on, because not every single day I'm able to make a video on what type of trades I'm making. But on Discord, even if I'm at school or I'm at work, I'll be able to post a quick update on what I'm doing. And my current challenge is bringing my $300 account on Tastyworks up to my a $20,000 account in basically a month. Let's see how far we get there. So far, I brought it up from 300 to like 2,500 in 2 days. So let's see how far can I take it before March ends and we go into April. So hopefully everything works out and I'm able to bring that $300 account to 20,000. So make sure you guys stay tuned. Do subscribe to my Discord chat, or check on my Twitter, or check on my stock tweets, and let's see where it takes us. So thank you guys for watching, and have a good rest of your week or year if you're watching this probably a year later from now. And don't forget to subscribe to the channel. See ya.